Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up for this Tuesday, the 19th of September, 2017, and we're just after 4 p.m. Central Daylight Time. API numbers came out, and while the market's down 45 in the November crude, it was really down about 2 points just prior to the the close of trading. And in the rebob, you were unchanged. So this 107 lowers because it closed at an earlier time. Got that? When we take a look at what's going on in the U.S. stock market, another day of gains. President Trump spoke before the UN, and he did what his constituents wanted him to do. He played rough. He called the North Korean leader, now Rocket Man. Remember, we got Dirty Hillary. I can go on with all the names that he's done, but we have Rocket Man now for Kim Jong-un. He threatened to wipe North Korea off the face of the earth if they attack the U.S. or one of our allies. He went after Iran. He went after members of the UN, saying that they are not contributing enough. The U.S. shouldn't be contributing as much as it is. I can go on with all the things that he had always promised he would do, and this is his first major speech before all of them, and he did what he promised. So in their eyes, it's going to be good. Will Kim Jong-un fire another missile to show the U.S. he doesn't have to take their nonsense? Probably. It's going to be tit for tat in some way. As we take a look at the metals, while you're down today on the close, 0.2, the last trades were closer to 314. This market was up into the 1735 area at the very end of the day. The dollar index is down as we've got a mixed bag of currencies as we get ready for tomorrow's FOMC meeting. And the look that you should have for it is, number one, it's a meeting with a press conference. The press conference will begin at 1 p.m. Central Daylight Time. Number two, it is expected that the committee decided to do a roll-off of the balance sheet, which means they're going to let some maturities expire. So as they come due, certain amount of maturities will be left to expire, others will be reinvested. What the Fed does is what everybody's going to look to see what the mix is and how the Fed's formula for that's going to work. The third thing that the market's looking for, if I think this is the third, I might have skipped one there, is what are they going to do with interest rates as they move down the road here? We expect that they're going to sound hawkish, but wait until December. No one's really expecting for the Fed to raise rates tomorrow. The fourth or fifth thing on my list here, and I'm going off from memory right now, is how much is the Fed going to try to get rolled off its balance sheet in the first year? And the talk is $300 billion. Now, the balance sheet moved from in the 2007-2009 timeframe from $900 billion up to currently about just over $4.5 trillion, whatever a trillion is. It's unbelievable. So shrinking $300 billion isn't very much. But they are intending that sometime in the next decade, you heard the word I used there, I'm not talking in front of us here, I'm talking next decade, they're going to be able to knock off about $2 more trillion. So we'll see if that all works. The goal is to not disturb the markets. That's how I think they're looking at it. And the stock market is taking it as a bullish cue. You're up another, for the week that is, you're up another 120 points in the weekly area chart of closes. Keep in the back of your mind on this chart, on a closing basis, everybody short this market is wrong. This market is finishing right now within 7 points of its all-time high. Number two, when you go to the daily chart of closes, up and away, same thing. The open interest, and it's large, everybody short with those people that are in the last 7 points of trade. Why do I say that? The high today, 22,343, you close 7 points from it. So anybody short from 22,335 has got a loss on their books. When we look at this rally, this is what's made this market hard for a lot of traders to get involved in. Where do you put a stop if you're wrong? probably under the most recent low, and that low is at 21,679. But from where you're at right now, that's one heck of a risk that you'd be taking in the market. And that's what's probably left some of the traders out. Support for the market comes in close to the 200-day moving average of closes. The green is the 100. I'll try to label those for you tomorrow so you see them as well. Bollinger Bands. This is called running the Bollinger Band. I teach this in my charting course, which if you haven't taken it, you should. And that's often, the word is often accompanied by a slow stochastic reading, which is an oscillator of momentum that is embedded. That is, it converted from overbought to where both the numbers that make it up, the K line, which is the red, and the D line, are going sideways over 80. Typically, the correction sets in, and it often, not always, but often momentum leads price. It often occurs when the red line closes back under 80, and then prices try to come down to the 18-day average. You're not even in that phase. That's why you're so strong, one of the reasons. Same thing's going on in the S&P. This market is just embedded, higher lows, higher highs. Unlike the Dow, it is not riding the upper Bollinger Band. It hasn't gotten up there, frankly, in about a week or so. Don't get me wrong, this is a market that hits it fairly often. But when you get that correction, and we can look at that, if I can get this to move over for me right here, when you lose an embedded reading, you get to see how the action sometimes shapes up. It's right here. So you've got a market that still has the embedded reading, and when you lose it, that's when price often goes to the 18-day average. Now, sometimes the price is much further than it is right here from there, but you'll see what I'm getting at. Got where I'm at? Then what this market did at this particular time, and this is in August 9th, you narrowed in the Bollinger Band, started playing back and forth in it, developing an overall sideways pattern, and then broke out to the upside. And that's where you're at. It's been a heck of a hard market to catch in all of these. The NASDAQ, I think, was one of the easier, and it surprised me today when it kept its embedded reading. It had lost it a good part of the day, but going in at the end of the day, higher lows, higher highs, embedded reading. I think this will be one of the first, along with the Russell, to give you some scariness. But because this one is so close to getting under 80, unlike the Russell, it's probably the NASDAQ that is going to be your first warning signal. Even this market, while it's down, kept its embedded reading. So, as far as I'm concerned, are we looking at an event where you buy the rumor, sell the fact? In other words, the market's been figuring that the Fed was going to let the balance sheet start shrinking. They're going to do it in a very contained manner. Is that enough where the market rallied on it? Now it gets the news and it backs off just because that's what happens. It's called buy the rumor, sell the fact. I don't know. When I look at the VIX, here you are, trying to make a run for the lower Bollinger Band, embedded reading, bearish. Are we going to get a bearish crossover where the 18-day average gets under the 100? That'll be interesting. When we had the bullish crossover, the market roared for the high up here. If we get a bearish one, I would think that you come down. So I'm waiting to see if that happens. When we look at TLT, the popular ETF for the Treasuries, well, you can see you're oversold in a downtrend, knocking on the door of your downside target, the lower Bollinger Band. The same thing has happened in the bond market. And I was coming off the floor today. This couldn't have been 30 minutes ago. I was doing a show in Australia, and one of the other analysts stopped me and said, Ira, what do you think of the bonds? Would you be short the futures going in? And we were talking. I said, well, the market was just 2.06, and now you're at 222 roughly. It's hard. And the question is, the trend is down. We see that, but you're so oversold, sometimes you just pick up your chips and you walk away. I have a philosophy also on major events, and I consider FOMC meetings that have a press conference. The word is press conference. A big event, because you never know what's going to be said. Sometimes you're just better off in the futures markets in cash. Remember, in the stock market, most people stay invested, they do whatever. Futures are meant to be traded, in my opinion, so there's nothing wrong with sometimes getting off the bus for a minute and taking another look. In the dollar index, unless you get back over 90, let's call it 9,200, the trend is down. You got lower highs, lower lows. Momentum is pretty flat. If it starts down here again, I'm looking for the lower Bollinger Band and then maybe a low. Let's assume that we get a surprise and you don't take out 91 36. You do realize if you take out 91, 99.5, if you don't take that low out, you could end up with higher lows, higher highs over the 18-day average and get a pop that scares everybody. Got to be careful of events, and you always look ahead on a chart with the what-ifs. In the euro currency, it threw out new buy signals. Higher low, higher highs. Trend signals, the better word. It shouldn't have said buy. It's now got the trend up, the bias up because the market's over the 18-day average, and you're flat trying to turn momentum here. Could this market throw out a fresh sell signal? No, it is not the flip-flop of the dollar because you got this pattern of the higher high. You could end up with a higher high and a lower low at best. What about the Aussie dollar? Well, if the Aussie gets over 80.27, what takes place is you negate this bit of a downtrend. And all that you did on the downtrend is you went back to the 18-day average. You never were weak enough to get down to the lower band. So this market is very much in neutral territory, in my opinion, right here. In the yen, as I've said, is this a major, major top? And the reason I say that is, how many times are we going to discount North Korea? And the last time the people ran for this, it gave it up so fast, that safe haven play, that you have to wonder. Now, in this market, you've got to take into account that Mr. Abe is liable to be calling now for a snap election. That's what I read today. If so, the odds favor he'll win. The question is what kind of coalition, what kind of backing is he going to get? So as this market's coming down, you got to keep that in the back of your mind. And remember, this weekend, if I'm right, we get the German election. So that's going to impact the euro. In the WTI crude, you've got a pattern of lower highs, lower lows with an embedded reading. This rules the day, not this pattern. So until the red line gets back under 80 on a close, the trend in this market remains to the upside. Gasoline is the same thing. You have an embedded reading, but it also has the uptrend still left. Higher lows, higher highs, still friendly. And nat gas, well, it got to the Bollinger Band and it's starting to balk at it. It's gone up because of this unusual warm weather that we're getting through the Midwest, moving to the East Coast right now, that's causing some earlier use of the nat gas than the market thought. Normally at this time of the year we open the windows, but when you're near 90, that doesn't happen often in the Midwest. So we'll see what goes on. Uptrend, though, at this point. And, of course, we are going to start talking eventually here about more usage of nat gas as the winter comes. Now let's talk about our chart of the day. We've put these now inside our charting platforms. So we've got pages in all of them, our Java and our web-based platforms, where you get to see these. And yes, we're rolling them out each and every day, and we're starting to make histories of them where you can see past ones so you can go in and see how they worked out. Now, we also teach you how to do them yourself. We put together option strategies based on them. We can get you on a list for those. How do you get all this? Call us. You can go to our website. You'll see our free offers. Sign up for it, especially for the price count. You can click up here if you're watching me on YouTube or underneath us on any of these websites that carry this as a player, as a separate video. You'll see click here for these free offers. Do so. Fill out the form. We'll get everything to you. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.